This is a tutorial for level 1B, support and resistances, and it's by Chetan, Potdar, that's me, right? So consider the price of a stock coming down. It's traveling down, and as it is traveling down, it travels down from here, and suddenly because there is a huge demand, it starts traveling up, and as it starts traveling up, again it starts traveling down again, and again there is a little bit of a demand there, so the price starts traveling back up again. Yeah, and now finally the price is going down, and as it is going down, it again turns up and then turns down and then finally turns up again. So you will have seen a lot of these formations in the market where the price is coming down, up, down, up, down, up, down, up. Let's try to decipher and understand why does this happen, and what is the reason why it happens, and how, whether we can explain it and make a system or a process out of it to trade it, right? Right. So consider different price points on this chart. Let's example that. Let us understand this price as 200. The price here is about 100. The price here is about 75, and it further goes down. The price is at about 50. Let us also understand that there are about 300 people waiting for here for people to buy the particular stock at this price. Yeah. So the prices are turning down. From 200 it's coming to 100, 100 it's coming to 75. At 75 there are about 300 people who want to buy it here, and there is a certain amount of demand there. Yeah, so let's understand the mechanism. So as the price is going to come down, see, there are a lot of people who have bought it at 200. The price comes down to 100. From 100 it comes down to 300. As the price is coming down, there are a lot of people who are going to start feeling a lot of pain because they bought it at the price of 200, and as it moves from the price of 200, they are going to have severe pain, isn't it? Now when the price further goes down at 100, and as the price goes down at 100, there are a lot of people who feel that it's a fair value to buy the stock, and they buy the stock. But after they buy the stock, the price further decides to go down, and as the price decides to go down, suddenly it comes across a point where there is a lot of buyers. Let's understand this. These are huge number of buyers here, and since these are huge number of buyers, they are exerting what is called as a positive pressure, a buying pressure, and as they are exerting a lot of buying pressure at this particular point, what happens is the price starts moving up. And as the price starts moving up, let us understand the mechanism. As the prices start moving up, what are all the people who have bought at the price of 100 do? What they are going to do is, from here to here, they were feeling pain. But as soon as the price starts going up in the direction which it is favorable to them, what they are going to do is, they are going to start selling the stock because they want to get out of that pain. So there is a little bit of a selling pressure which comes into play here. Yeah, now since there is a lot of selling pressure coming into a play, the price again starts moving downwards. Yeah, and as it reaches here, now there are about 300 people who were ready buyers here, but only 100 people got the stock, and since only 100 people got the stock, let us understand what happens. So 300 people becoming 200 people. Now there are 200 people who are waiting here to buy the price, because when they were over here, they did not get the stock, and as they did not get the stock, they were feeling dejected because they saw actually the price started moving up, isn't it? So 200 people waiting here. Now again there is a certain X amount of demand, and since there is an X amount of demand, apart from the 200 people, say maybe only 100 people are able to buy the stock. So let us see that about 100 people are able to buy the stock. So the amount of people who are remaining is only 100 people. So what happens here? As there is a huge demand, the price decides to turn around and go up, and as the price decides to turn around and go up, let's understand the mechanism. all the people who have bought here, and they have a certain X amount of memory that as we buy over here, price goes up and turns around and comes down. So all the people who have bought here are going to feel the pain. Why will they feel the pain? Because price has gone up, they have made profits, and after making profits, the price has started coming down. So what are the first thing they are going to do when the price starts going up? They are going to start selling here. All the people who have bought here, there are a lot of people who have bought here. Let's understand their mechanism. Price went down, they were sad, they were happy. Price further went down, they are very, very sad. And the moment the price comes back to the same level, what are they going to do? They are also going to sell here. Yeah, they want to get out of the stock. They don't want to deal with the pain anymore. But let's understand most importantly what is happening with people who have bought here and what happens over here. See this, prices have gone down, they're feeling severe pain. Price starts going up, they see a ray of hope, but suddenly the price starts going down again and they feel even more pain, and then finally the price starts going up again. They are seeing a ray of hope, but they have also been observing this price and they realize that every time the price comes here, the price goes down. Now they also don't want to be buying into the stock. So what will all the people who are here do? They are also going to increase the supply, and as they start increasing the supply, so this is a point where there is a huge supply of people who are selling. Huge supply, price starts going down. So let's understand what happens. Prices started going down, and as price starts going down, now there are 100 people who are waiting to buy here, isn't it? And if there are 100 people who are waiting to buy, what are they going to do? Let's see this. So 100 people who are waiting to buy, since there is a lot of supply, 100 people end up buying the stock, and as they end up buying the stock, the number of people who want to buy goes to zero, and as the number of people who buy goes to zero, what happens? Huge supply, no demand, price further goes down. So price continues to further go down. Yeah, and the price finally comes to the point which is 50. Now at the price of 50, there are, let's say, 100 people who feel that this is an excellent value to buy the stock. And since there are excellent value to buy the stock, there are people who have bought here, and there are people who have bought here, and there are people who have bought here. And since all the people who have bought here, they are going through a lot of pain as the price goes down. And if they are going through a pain as the price goes down, they don't want to sell it over here. They do not want to sell it over here. So let me write this down for you. So here, there is no selling which is happening here. So since there is no selling which is happening here, there is no supply. And since there is no supply at this particular point, and about 100 people who want to buy this stock, the 100 people cannot get this stock. So what happens? Instead of 100 people who get the stock, say maybe only about 50 people get the stock. And since only about 50 people who get the stock, what happens? There are about 50 people who are remaining to buy the stock. Yeah, so no supply, there is demand. If the demand exceeds supply, what happens to the price? Very simple, the price starts going up. So let's understand this. Price is going up, and as the price goes up, it comes to this point, this particular point. Now understand this phenomenon. There was a buying pressure here, there was a buying pressure here. Now since there was a lot of buying pressure here, and there are a lot of people who bought it, say about 200 people bought it, price went up, they were very happy. They did not sell because they thought the price would go up further, and the price started going down. And as the price started going down, from this point onwards, they are going to start feeling a lot of pain. And since they are going to start feeling a lot of pain, they are going to start selling here. So they sell their stock over here because they feel that suddenly this is a wrong investment. Now huge supply, no demand, price starts going down. As the price starts going down, obviously there is pain which comes into play, and there is pain. Now there were some 100 people who had got the stock, and out of 100 people who got the stock, only 50 of them were remaining, isn't it? Now Understand the mechanism here. These 50 people bought the stock, went up. Some of them did sell off here, and since some of them did sell off here, they're happy. But a lot of people also realize that the price goes up from here to here. So what are they going to do? They are going to buy here, and since they are starting buying here, there is demand which is created. Also understand, a lot of people who have bought here and here and here and here and here are not going to sell here, because nobody likes to sell in a loss. And since nobody likes to sell in a loss, there is no supply. And since there is no supply, so let me write this down for you. There is no supply here, and since there is no supply in this point and there is demand, what happens? You're right, the price starts going up again. So let me draw this for you. The price starts going up again, and now since the price has started going up again, people have got this collective memory that the price moves up from here to here, and all the people who have bought here have sold off. So if they have sold off, there is no more supply remaining, and since there is no more supply remaining and there is only demand, what happens to the price? Price goes up. You're right. So if I draw these two lines here, yeah, this is one line and this is second line. Yeah, let me actually draw this line again in a green. So understand that there is a line which gets drawn here, and let me draw this as red. There is a red line which gets drawn here. What happens is, every time the price comes down, because there is a buying pressure, price goes up. Price comes down, there is a buying pressure, price goes up. Price comes down, and finally the price goes through it, because all the people who wanted to buy at this price is exhausted. So price comes down. So we can call this line as resistance. So there is a resistance for the price to go above this. It is like a glass ceiling. But on the other hand, we see that here the price refused to go further down. So from here till here, we can call this line as a support. So this is a support line, this is a resistance line. Now funny thing happens, as the price breaks this support and price goes down, and as the price starts coming up, all the people who are bought here and here who want to sell it off, and since they want to sell it off, this line acts as a ceiling. So let me kind of make this line over here, and as this line becomes a ceiling, we can again call this line as a and similarly we could also draw a line here at the bottom. Yeah, we could draw a line there at the bottom and call this line as support, and this line is called as resistance. So what do we conclude from there? As the support line gets broken, it turns around and becomes what we call as a resistance. It turns around and what we call as a resistance. Yeah, support becomes resistance, and resistance, now this, as the price starts going up, all the people who have bought it and did not get the stock here, they are going to start buying, and hence we always say that support turns to resistance and resistance turns to support. And this is how we would be able to explain the phenomenon of support and resistance. So support and resistances are basically created by groups of people who buy and sell a stock because of emotions like pleasure and pain. When you have pleasure, which means you are making money, you buy, and when you have pain, which means you are losing money, you start selling. So this is the easiest way I can explain to you how a support and resistances are drawn. So very quickly, this is how we see the chart. This is how we see the chart. Prices come down, prices gone up, prices come down, prices gone up, price goes through, gone up, goes down, and again goes up. You draw two lines. This is a resistance line. This is the line which we draw. We don't see it on the chart. This is a resistance line. This is the support line. But the moment we start extrapolating emotions into the chart from market participants, this is what we see. Yeah. So this is the way the X-ray of the market looks like, and this is what we study in technical analysis. So this is what people see in the market and how the prices move, and the moment we extrapolate emotions, this is the way it looks like. So I think this will be able to clarify what support and resistance are in detail.